Every year, I talk about how interesting the tax world is, or at least I've always found it interesting. I practiced tax for 25 years of a 30-year career as a CPA. I was a partner at PwC and a partner at Deloitte. I started my career with Arthur Andersen. Has anybody heard of Arthur Andersen? Arthur Andersen is like in the dictionary under what you shouldn't do. Arthur Andersen. A great firm, but unfortunately, I think cocky is the correct word. They were very sure of their capabilities, perhaps too sure. Which brings to mind what I think is the most important characteristic for an accountant or any professional, including a physician for that matter, to have, which is humility. And Arthur Andersen is a reminder to me every day of the perils of not being humble. Anywho, I happen to think that taxes are really interesting. A lot of business people, including my late father, didn't make a single decision without talking to his tax person. Tax law changes a lot, and we happen to be in 2017 in the middle of some of the biggest changes in the last 30 years in tax law, particularly as regards corporations. If we have time today, I'll tell you what that all means. If not, I'll do up a little video for you to look at on the weekend just for your own interest to help you follow the news. And I hope you do follow the news because there is a lot of news, particularly these days, about tax. Canadian tax, U.S. tax, where as you may know, they just passed even bigger changes in the United States to taxation than in Canada. Changes that will have worldwide impact. On any company's income statement, the tax line is one of the most significant lines, often in terms of amount and sometimes in terms of important. If you look at any household, including my house, tax is a large number. And my wife and I, we pay income taxes and sales taxes and property taxes and all kinds of taxes. In this course, we'll talk about income taxes and a little bit about GST. I also enjoy teaching at this time of year for a couple of reasons. It's sort of tax season, so people are looking at things like making RSP contributions, and of course tax returns for individuals have to be filed in what month? April, thank you. April 30th. And also this is the time of year when the federal budget comes out. So the federal budget is a once-a-year thing where the finance minister stands up and says, we're going to spend this much money on this stuff and infrastructure and healthcare and those types of things, and this is how we'll raise the money, and part of that is about taxes. And it's usually the time of year when tax changes are announced as well. So actually, rules affecting things like making, as I said earlier, RSP contributions and those types of things often get announced in the budget, which takes place usually in February or March. The 2018 budget date hasn't been set yet, but I can tell you that folks in practice, they watch the budget speech on TV. It usually comes on at 3:30 Central Standard Time, 4:30 in Ottawa, and man, they get like popcorn and I was going to say beer. We used to drink beer, but I guess we don't drink beer anymore. But it was a big deal, and it still is. So this is sort of it's like the Super Bowl for tax people. It's awesome. As I said before, there's a lot of news these days about tax changes, mostly to do with corporations. You would have heard of words like income sprinkling and those types of things. We're going to talk all about that in this course, sooner rather than later, actually, for you to be able to understand what some of these news reports are all about. Plus, I don't know, maybe your parents need some tax advice. You can start sorting them out. Let us take a small tour of D2L. It's not a long tour if you saw my welcome email. And by the way, if there's anybody who's registered later than about Wednesday, come and see me, and I'll send you an email that the rest of the students would have got earlier this week. So basically everything that you need to know is here, which you can bookmark. And once you've done that, you can go to any chapter or anything like that and see all of the resources that are available to you. Let me give you an example. The course outline, hopefully you would have received before Christmas, I hope, but if, in case not, it's here. The outline talks about some quizzes, midterm, and a final exam. Gives a schedule for each class, more or less. Hope that's useful to you. This textbook is quite good. This textbook is written by an ex-Winnipegger called Bill Buchwald, who actually taught at the predecessor to the Asper School of Business, and in fact was one of my teachers when I was preparing to write what was called the Uniform Final Examination for, in those days, Chartered Accountants. So Bill Buchwald is the main writer of this book. He has prepared slides. I personally don't use the slides, but you might like to use them as a companion to the textbook, maybe as a study aid. These are the solutions to every question in the textbook. And I will give you suggested questions to do, and also tell you questions you shouldn't do. If you want to do more, that's fine, but at least do the minimum that I suggest for you to do. And all the answers are at that link. These you can bookmark. You don't have to go through D2L to get here. You can just, as I say, bookmark these pages if you like. I am a big believer in allowing students to have anonymity when they ask questions. So you'll notice I'm going to post question and answer pages that are anonymous. This one's about general questions about the course, but I'll also post one for each chapter. Chapters 1 through 3 I'll combine into one. I look at these things 2 or 3 times a day, sometimes more often. They are totally anonymous, so somebody's posting now, which is great. And I will post my answers. So if you like, you can see what questions other students are asking and my answers, and you can post your own questions and answers. I hope you find this useful. It's, again, to allow anonymity, so you don't have to send me an email or anything like that. You can just post here, and I'm on this like 7 days a week, so don't worry if you post on Sunday or something. You'll get an answer on Sunday. Textbook pages you can avoid reading. Thus, my advice to you is, like, don't read the chapters in depth before you come to class. Flip through them like this, come to class, look at this list, and then read the chapters in detail after class. And honestly, I hope if I'm doing my job well, the chapters will make more sense to you reading them after class than they will before class. This is where I'll post videos. Here's a Q&A page for chapters 1 to 3. And I will post problems, as I say, please do at least these and do not do these. This is a ridiculously difficult course. When I took this course, it was in 2 courses. Most universities in Canada offer this course in 2 courses. The Faculty of Law, where I teach corporate tax, does basically this course over 2 3-credit-hour courses. We, for some reason here, and I've been trying to change this for years, squash this into a 1 3-credit-hour course. So does the University of Winnipeg for some reason, don't know why. It's not fair, actually. That's how difficult it is. Please, I beseech you, stay up to date on the readings and try to do problems like every weekend if you can, based on the previous lectures. And please go to the labs. That's one thing I was able to achieve, was getting a lab at least. And the labs start on Monday the 15th. And you'll be doing questions in the labs where we'll take an exam question or the type of question you would expect to see on an exam and break it down to about 3 or 4 parts. Do part A, look at the solution, part B, look at the solution, part C, look at the solution, et cetera, et cetera. So breaking stuff down, and hopefully that'll be of use to you. These videos from the class will go onto YouTube. You can access them via these pages, or if you subscribe to me, they just show up in your inbox, which is awesome. I will also post a set of topics most likely to be on the exams. I'm a big believer in materiality. Materiality, an accounting concept, anybody? Mm-hmm. Significance. The classic definition I learned was an item that is significant enough to affect the decision making of the reader of a financial statement. Not all of the topics we will cover are material. 80% of the topics are worth looking at, 20% not at all. In terms of exam studying, I will tell you which topics I will take 80% of the exam from these topics. So that's how every chapter will roll out. We're going to do chapters 1 through 3 and then 5. The reason for that is that chapter 4 covers employment income. I know that it's probably the thing that you're most familiar with as far as taxes are concerned, because if you work, have a job and you have taxes withheld from you and you file an income tax return and stuff like that. But it's actually one of the most complicated parts of the taxation of an individual. So we're going to go from here to look at the taxation of a business, which is more like maybe what you've been learning if you've been taking courses like, financial accounting, assets and equities, those types of things. We typically start with an income statement, and then we'll go from there. Any questions so far? In case you didn't hear at the beginning, I said that the Income Tax Act, you can take it into exams with you. So it's an open book exam as far as the Act is concerned. And you can write anything you want and tab it any way you want. Write in the margins, write on the inside covers. What you'll find though, you might want to start writing with a pencil, because you're going to think that there are so many things you want to write that you want to start erasing things. Trust me, use a pencil at least for a while. What you cannot do though is insert other pieces of paper, that type of thing. Can't bring your lecture notes in, that type of thing, but you can write down anything you want, like formulas or definitions or anything. Yes?
So we can't write on the actual tabs that we use in the book?
You can take a tab. Can you hold that one up? You can use like does anybody have with you any like tabs for the edge? Exactly. So use those please for the to stick out of pages. On the inside, if you want to, you can use these tabs, or pardon me, these Post-its. Does anybody have any of those? On the inside, but sorry, that one's a little bit big to, something about half that size would make sense, sort of one per page. I'm okay with that. Here's another secret. You're not going to have a lot of time during exams to look at these. The main reason I think it's important to write notes in here is just to reinforce in your own mind, to write down one more time what it is you're learning. That's honestly what I think the main advantage is, and I would encourage you to do that. But during exams, honestly, if you have to go to the Act for every item, my guess is you'll probably be doing it for maybe 3 items during the entire exam. So I mean for the Income Tax Act inside the exams to be a help, but please don't depend on it as your primary source of knowledge. Please also don't depend on memorizing. I think this course is hopefully more about learning. And please come to me, like, the second you've got a problem, either post your problem or come see me after class or something, or ask for office hours outside class. I'm happy to do what I can to help you, and it's way easier for you if you get onto it very early rather than later. Like a week before the exam is too late, to be honest with you. There will be 15-minute quizzes. I forget how many of them, 4 or 5. The whole purpose for that is just to give you some of your own marks back for keeping up with the reading. Course is marked on a curve. For those of you who are not accounting majors, C+ is really important for them because they can get certain exemptions in the CPA program. Of folks who do not voluntarily withdraw, I will make it so that 70% or more of them will get C+. Can you please pull out your computer or phone and go to the Poll Everywhere link, which, if you have your computer, is here. And if you have your phone, hopefully, as per the email, you have downloaded the Poll Everywhere app, P-O-L-L Everywhere app, which is available either on Android or iOS. So once you go into the app, please enter Dan Torbiak. Dan Torbiak, 667. That's the number they gave me. I honestly didn't know there were that many, Dan Torbiaks, but whatever. What is your favorite color? Is anyone having difficulty? Thinking there's a lot of votes for blue. Nice. Let's do one more. Purpose today is just to get us used to using this tool. What are you hoping to learn in this course? To the 3 people who have posted one word tax, thank you, but 4 people, okay. Oh, tax stuff. Okay, great. Yeah. Tax rules. Okay. Good. The system works.
It's letting me
Oh,
do
wait.
one reply.
When you hear my views on tax evasion, you'll be so glad this is anonymous. Sorry, there was a question? Yes.
It's like it let me do more than one reply.
It does, yeah. Yep.
Does it make any difference for when we're going to be doing stuff like this?
No. So this isn't for marks or anything. It's just I'll ask you actual questions and you'll post your answers. It's nothing for marks or anything like that, and you can post more than once. Unlike we're on exams where you only have one guess. Thank you. You can put that away now. Chapter 1. What is the value to the world, to society, or whomever, of having a career in tax? What does it do for people, for any of you or for me to help folks with their taxes? I have 2 answers to that, and I would ask you to write them both down. One is to help people save tax. And the other is that tax is really complicated, and perhaps even more than saving tax, people will love you if you can make it understandable for them. Not necessarily to sort of teach them tax, but to say, hey, look, this is the tax plan that I've designed for you, for your corporation. And it works more or less as follows. The following are the risks. For example, here are reasons why CRA might take an opposite position. And here's my estimate of the tax that it'll save you. A business person can then make a very well-informed decision about whether to do that tax plan or not. So there are 2 ways I feel that tax advisors can benefit, let's call it society. One is to save tax, and B, to make tax more understandable. Another way to put that would be to resolve complexity. To take something that's complicated and make it understandable. And finally, and I hope that by the end of this course you will understand this, to resolve anxiety about tax. There are a lot of people, like smart business people, experienced folks, even accountants. Man, you start talking tax with them, it's like, oh, sorry, I can't do it. And I feel sorry for those people because tax is eminently understandable. It's one of those things that once you've developed some background in it, you can learn new things quickly, and particularly that things change year to year. It's actually quite interesting to follow these changes and what they mean for businesses and the economy and individuals. Regarding decision making, and the chapter has a good discussion about this. Every transaction has a tax result. Every income item, every expense item, every balance sheet item, every asset, every liability, everything has a tax result. And sometimes more than one tax. So for example, a sale increases our income, which increases our income tax. And for a sale, there might also be a sales tax impact, and not just GST, but maybe Manitoba retail sales tax, that type of thing. Every transaction has at least one and maybe several tax results. We see this personally. You know, we buy things, we sell things. Today I went to Subway. I bought my usual 6-inch on 9-grain wheat roast chicken. All the veggies except lettuce. $6.50 or whatever plus 2 taxes. There was a tax discussion. It's a tax calculation. If for some reason that meal would have been deductible to me, which it's not, there might also have been an expense for tax purposes, for income tax purposes. So every transaction has a whole bunch of tax implications. In the business world, which is, for those of you who are on an accounting track, you'll probably spend most of your time in your career advising businesses rather than individuals. Taxes are very important when people make decisions about expanding businesses, they're buying or selling businesses, perhaps going into new countries, new provinces, that type of thing, getting into new lines of business. We'll talk about all these things during this course. Bottom line is that virtually every transaction and every decision has a tax impact, and tax advisors can have a very important influence on what business people do. Chapter 2. Chapter 2 has in it one of my favorite topics, which is the difference between tax planning, tax avoidance, and tax evasion. And I can sort of draw a diagram on that where you got like a continuum. And evasion is over here, and planning is over here. So this is sort of the safe end, and this is kind of the dangerous end. And then in the middle you've got avoidance, thank you. And avoidance is actually the most difficult to understand. Planning is really straightforward. Between now and February 28th, I can make an RSP contribution and have it count as a deduction for 2017. That's tax planning. Tax planning is something where you can probably go on CRA's site and they'll tell you how to do it. Or you can have lunch with one of your friends at CRA and not be shy to talk about, I made an RSP contribution, or I did this type of planning or that type of planning. So planning is very straightforward. It is approved by CRA. It's completely within the rules of the Income Tax Act. As a matter of fact, the government is probably incentivizing you to do things. The government wants me to make RSP contributions so that I'll have a good retirement, and therefore the government doesn't have to support me. I don't have to go on welfare or something like that. So the government is actually happy when I make RSP contributions. So happy that they will give me a tax deduction, and then all of the income I earn inside the RSP is tax-free until I take it out, which is, well, it's pretty good actually. So that's planning. Evasion is where I tell a lie about something. So for example, I make up a transaction that didn't exist. There are people who have been convicted of tax evasion for manufacturing charitable donation receipts. Making up on a word processor, a fake receipt and then claim a deduction or credit for a donation made. There are people who misrepresent, that is, tell a lie about certain types of income. Oh, it wasn't my income, it was my daughter's income. Or it was not this type of income, it was that type of income. Or they hide income. These are all examples of tax evasion. Tax evasion, there are penalties for it in the Income Tax Act, like dollar penalties, 50% of the tax that was evaded, that type of thing. More importantly, it's a criminal act. You can go to jail for tax evasion. I will not visit you in jail. If you go to jail for tax evasion, I will disown you. I hate tax evasion. I hate it for two reasons. One is it's dishonest, and I don't abide dishonesty, but it's also lazy. It's easy to use a word processor to do those things I said, or it's easy to hide some income, or it's easy to tell a lie. And what's in the middle, actually, is extremely hard work. Avoidance, as you'll find out, is crazy hard work. It involves a lot of research. It involves a lot of problem solving. People talk about engineers being the best problem solvers in the world. That's probably true. But tax planners are probably second, because some of the things that they come up with that are within the realm of saving tax, but sort of not something that CRA would sanction, or maybe the CRA has even thought of, but they're completely legal. But they're not hiding anything or mischaracterizing anything or telling a lie. Let me give you an example of what tax avoidance looks like. So I'm on the chapters 1 to 3 resources page, and I'm going to this, so I clicked on this Duke of Westminster case, which I'll talk about in a second. Singleton case. We're going to talk about the Singleton case. A lawyer is a partner in a law firm. He and his wife want to buy a house. They're going to have to borrow the money for it. The interest expense would not be deductible. In Canada, interest expense to buy a house is not deductible. He says, what is the law in Canada for interest expense? He goes and researches court cases and finds out that the use made of the loan is what's important. So if you buy a house, you bought it not for a business reason, you bought it for a personal reason, the interest isn't deductible. He says, what if I borrow the money to make an investment? Well, that'd be okay. So he withdraws $300,000 from his law firm. I don't know why his law firm had $300,000, but they did, and he took that money out. That's a tax-free transaction, by the way. That's what an accountant would call a balance sheet transaction. It's not income. It's just that he previously had a capital account, like an investment in his law firm. He took out $300,000 and just simply reduced his investment, so it's not income. He uses that money to go buy his house. And then he goes to the bank and he borrows $300,000 to replace the $300,000 into his law firm. That is, he invests now $300,000 into the law firm. CRA says, are you kidding me? Yesterday, you had no money and no house. Today you have no money and you have a house and a bank loan. We think that you borrowed the money to buy the house. It's common sense. Look at your balance sheet yesterday and your balance sheet today. He says, no. I went back over the court cases on this, and I found out that it is the direct use made of the money that governs whether interest on the loan is deductible. So CRA says, you're wrong. They assess him. He goes to court. This goes all the way to the Supreme Court of Canada. So the first level is the Tax Court of Canada, and then the Federal Court of Appeal. And now the Supreme Court, like the Supreme Court of Canada, from which we just had a retirement of the Chief Justice, like that Supreme Court of Canada, they decided that he was right. This is exactly what tax avoidance is. It's not something that CRA would necessarily agree with. In fact, he had to take them to court because they did disagree with him. It's not evasion. He didn't do anything illegal or hide anything or tell a fib or anything like that. In fact, it's the opposite. He went through steps very carefully and documented them all. He didn't just say, I borrowed money and made an investment. He actually went through the trouble of taking the money from the law firm. There's a paper trail for each of these transactions. And he's got a bank loan, and the bank loan indicates that there's a direct link from the money borrowed from the bank to the putting money back into the law firm. Very careful, very deliberate, all of the documentation there, hard work, awesome result. This case is one of the most important cases actually in Canadian tax law. Financial planners will say to their clients, man, I see you've got an investment and you also owe money on your mortgage. Like, why don't you sell your investment, pay off the mortgage, and then borrow to buy the investment again? It's because of this court case. What I just described is like elementary personal finance 101 for financial planners. It's because of this court case. So the court case isn't just for lawyers who want to do a whoop-de-doo to buy a house. It stands for the proposition that it's possible to borrow money directly to be used for something, even though economically speaking, it's actually being used to, in this case, buy a house. Any questions on that? What is the morality of this? There will be people who say, like, why should you be able to do this, and why isn't it just outright illegal? I can't help you on the morality part. You'll probably have to make up that one on your own. But I will suggest to you another example that's sort of like tax avoidance. In my house, one of our kids is still at home, and she has a car, and her driving record is so-so. She had an accident a couple years ago, so she has a whole whack of demerits. My wife has a very good driving record. She has like 15 merits or something. And my kid said, Mom, let's put the car in your name, which my wife did. So now my kid's insurance is a lot less than if the car were in her name. But my kid went through the effort of transferring title and ownership in the car to my wife. And my wife said to Autopack, here's the transfer and title and all the rest of it. You might have actually seen an article in the paper about this last week because MPI knows this is happening. They're not happy about it. But this is exactly the mentality or the moral thing. This type of, I'll call it insurance planning with MPIs, is identical to tax planning. I wouldn't ask this question, not even on polls everywhere, but I imagine that there might be one or two people in this room who have done the same thing. And there's nothing wrong with it from a moral standpoint, in my view. But heaven help you if you haven't actually gone through the trouble of transferring title and stuff like that, because if you tell MPI that the ownership is in this case, my wife's name, and it's actually in my daughter's name, well, that's telling a lie. And that's over here, and I won't go visit my wife and daughter, Jim. I would visit them. Here's what the law says about this. So on page 1 of that link is this. The Duke of Westminster, this is a court case that governs Canadian tax law today, even though this case happened in, 1936. In fact, it happened before there was a Supreme Court of Canada. It happened at a time when the House of Lords in England was actually de facto the Supreme Court of Canada. And this is what the judge said. Every man, every person, is entitled to order his or her affairs so that the tax attaching under the appropriate acts is less than it would otherwise be. If he or she succeed in ordering them so as to secure this result, then however unappreciative, I love that phrase, however unappreciative the Commissioners of Island Revenue, which is, Inland Revenue, that's CRA in Britain, or his or her fellow taxpayers may be of the ingenuity, he or she can't be compelled to pay an increased tax. That's the law in Canada. There's nothing that says we have to pay the maximum amount of tax. We're fully entitled to pay the minimum amount of tax, just as long as it's this or it's this. Income Tax Act says, okay, look, we get it that people have the right to rearrange their affairs or whatever it is. So if I want to, if I operate a business, let's say I'm a hairdresser, I can run that as a proprietor if I want. I can run it as a corporation as I want. I don't even need to have a corporation for tax reasons. Maybe I want to have limited liability protection. But I can do what I want. And I will be taxed according to whatever business model I have. Proprietorship, partnership, corporation, etc., etc. I'm completely free to do these things. But then the Income Tax Act says, look, we need to put some limits on this, because if we don't, people will just pay zero tax because they'll come up with ways by which they will try to fool us. So the first way I'd like to talk to you about is Section 67. Please open your Income Tax Act to Section 67. So if you look at the top of the page, those are the section numbers. So for example, I've got mine open to 163.2. That's section 163, subsection 2, which I might call 163.2, or I might call 163 sub 2, in any case, section 163. But I'd like you to go to section 67. And you'll find that I don't call out page numbers. I just call out section numbers. Section 67 is an example of an anti-avoidance rule. Anti-avoidance. In computing income, no deduction shall be made in respect of an outlay or expense in respect of which any amount is otherwise deductible, except to the extent that the outlay or expense was reasonable in the circumstances. That's like about 30 words that could be translated into, you can only deduct reasonable stuff. So it's got to be reasonable both in terms of the nature of the expense and also the amount of the expense. Let me give you an example. When I was in university, I delivered pizzas. This is like 30 years before Skip the Dishes. It would not have been a reasonable expense for me to use an aircraft to deliver pizzas. Just not reasonable. Maybe today a drone might be, but 30 years ago it wasn't reasonable to use an aircraft. It would also not be reasonable to use a Porsche 911 to deliver pizzas. Whatever expense that is just not a reasonable expense in the context of delivering pizzas. So those are two ways by which a certain type of expense would be unreasonable in the circumstances, and therefore can't be deducted. So Section 67 is what we call a specific anti-avoidance rule. Specific because it only deals with one thing, which is deductions. We'll talk, especially in Chapter 5, about other specific anti-avoidance rules. Over time, the Income Tax Act became sort of full of specific anti-avoidance rules. And people were saying, well, this is awesome. I mean, all we have to do is go in between the specific rules and we'll be fine. Then the Income Tax Act said, or the Department of Finance, it's the Department of Finance who creates the legislation. It's the Department of Revenue, CRA, who administers it. So anything you see in the Income Tax Act is actually created by the Department of Finance, not by CRA. Department of Finance gets all concerned and says, look, I know we've got these hundreds of specific anti-avoidance rules, but we also need a general anti-avoidance rule, because there will be things that fall through the cracks between the specific anti-avoidance rules. Please turn to section 245. In your textbook, I'd also like you to open it, please. This one, I will give you the page number. (1919). Canadian tax authorities have enacted a broadly based general anti-avoidance rule, which we call the GAAR, G-A-A-R, to supplement the more specific rules. The GAAR stipulates that when a person is involved in an avoidance transaction, which is defined in section 245, if we're in an avoidance transaction, the tax will be adjusted to deny whatever the benefit was of entering that transaction. So that might have been, a lower tax rate or a deduction or something like that. It just wipes it out. Very powerful. So we start with, is there a tax benefit? So here I'm on page 19 in the second last full paragraph. Tax benefit is a reduction, avoidance, deferral. Deferral means push the tax into a later year. Given the time value of money, deferring tax is sometimes almost as possible as wiping it out. So if we've got a tax benefit, and that'll usually be pretty obvious that, yeah, there was a deduction or the tax got deferred or the tax rate is lower than it would otherwise be because we did some fancy transaction. We have a tax benefit. And then we determine whether it's an avoidance transaction. So if we have a tax benefit, then the next step is an avoidance transaction. For a transaction not to be considered an avoidance transaction, its primary objective must be other than to obtain a tax benefit. I don't know about you, but I hate double negatives. But that's the way the Income Tax Act is written. So for it not to be an avoidance transaction, its purpose cannot be to save taxes. Here's a better way to put it as a positive. If your transaction is primarily for real business reasons, like we bought a piece of land on which to build a property, a manufacturing plant, or we are doing succession planning by transferring the ownership of our business to the next generation or something like that. If we primarily have a business reason to do it, that is a non-tax reason to do it, we don't have an avoidance transaction. But the Act is written in this double negative as I just showed you here, and I'll show you in the Act itself right away. And you do need to know the double negative part. I'm just trying to explain in better words how it turns out from a positive part. Here's the double negative piece. See all this fine print? These are all court cases that have been fought on this. In only, I think it's been around for 32 years. There have been a whack of court cases as to, was it an avoidance transaction? Was there a tax benefit? These things are not completely understandable even by tax accountants and lawyers. That's why we go to court sometimes to figure out actually what the words mean, believe it or not. Tax can be very complicated. (245)(3). An avoidance transaction means any transaction that, but for this section, would result directly or indirectly in a tax benefit, unless it's the transaction may reasonably be considered to have been undertaken or arranged primarily for bona fide, bona fide, real purposes, other than to obtain the tax benefit. So that's the double negative part. I would translate that to say if you've got a bona fide, real business reason for doing the transaction, it's not an avoidance transaction. Any questions on that? The GAR came out in the mid-'80s, primarily as the result of a court case that was heard in the early '80s called Stubart. Stubart is kind of like one of these Duke of Westminster cases, like it's got really overreaching importance, not just to whether something was deductible or something. It's like the whole tax system. It was a Supreme Court case, and it basically said taxpayers can do what they want as long as there isn't a rule. Like, things are good. So then the government said, well, in reaction to that, we need to put a rule like this in to say that the government, via the Income Tax Act, has the right to stop unreasonable avoidance. We're not even talking evasion here, because there's tools to combat evasion, but avoidance that the government thought was unreasonable. The interesting part about that court case is that the decision was written by the then Chief Justice of the Supreme Court, a Winnipegger who was a partner at Aikens McCauley downtown. I kid you not. Winnipeg factors big in accounting, legal, and judge circles, judicial circles. There are some very significant tax practitioners who come from Winnipeg. KPMG's global tax leader came from Winnipeg. As time goes on, I might think of some other examples, but Winnipeg factor is big in the tax community in Canada. So, specific anti-avoidance rules, for example, Section 67, general anti-avoidance rule, Section 245. We've talked through 2 of 3 tests for the GAR. One is there a tax benefit. Second, is there an avoidance transaction? If yes to both of those, there's a third test, which is described on the top of page 20. Effectively, this misuse or abuse criterion says that even when an avoidance transaction occurs, and for there to be an avoidance transaction, there had to be a tax benefit. The anti-avoidance rule will not be applied if it may reasonably be considered that the transaction would not result in a misuse or abuse of the provisions of the Income Tax Act taken as a whole. Therefore, for a tax plan to be rejected, it must fail the business purpose test. That is, it wasn't undertaken primarily for business reasons. And in addition, must be extreme to the extent that it's not within the spirit of the tax system as a whole. That is, that the transaction misuses or abuses the Income Tax Act. So the three tests are, is there a tax benefit? Is it an avoidance transaction? That's the business purpose thing. And the third is there an abuse or abuse, misuse or abuse of the Income Tax Act, either of a specific provision or the act taken as a whole? If all of those apply, and you got to admit, like having three tests, that's actually a pretty onerous thing for CRA to have to prove. But if they can, then CRA has the power to wipe out whatever the tax benefit was. Again, all of this is with regard to avoidance, not evasion. Evasion has its own set of rules, including criminal law. This is more about the sort of subjective stuff in the middle, of the type as a Singleton case. Very interestingly, the GAR was not argued by CRA in the Singleton case. I actually don't know why. If CRA had said to the Supreme Court, okay, fine, okay, we get that the interest is deductible because it was the direct use made of that or whatever, but you know what? We're gonna say GAR. We're gonna play the GAR card. I don't know why they didn't do that. Had they done that, the Singleton awesome success may actually not have happened. And I think Singleton was late enough, that is, it was after 1985 or 6 or wherever the GAR came in. But for some reason, CRA did not argue the GAR, and 32 years later, we still have the Singleton case as what we call good law. Amazing. It amazes me truly. And I myself have used the Singleton method, let's call it, to advise clients to make their interest deductible.